Yo, good morning, man. You already know what it is. Trap here with that sauce, you heard? Let's get it going, man. This week we got a short week in the markets. As you know, yesterday the stock market was closed, but futures were still open. So we saw some of the moves after Trump tweeted that is a possible solution to the Iran issue, right? So the markets reacted to it pretty well, but gave it all back. As of right now, just gonna check it out, see our weekly review of all the assets that we're looking to get into, what levels we're looking to get into. So if this is something that entices you, make sure you like that button, make sure you share, and make sure you save this so you can watch later. Let's start it off with the ES, right? So we usually tend to start off with. One second, let me adjust the screen here. All right, so here we go. This is the ES, so S&P 500 futures, right? So we usually start this to kind of like give us a direction where the market is going. Obviously, as you guys heard, we were closed yesterday, but as you guys can see this move right here, we did a nice move, a minor sideways with a little bit of correction and then impulse to the next all-time high. Same thing that happened here, right? Sideways, upward momentum with a small correction downwards, and then another one of the same style of move correction, and then we should see another one of these, right? So this could be a blow off the top, so we can see a circle come down here, maybe even low to the 5700. That would be like really bad, but what I'm seeing here is if we do get some type of correction that is not significant, but what I like to see is something like, yeah, something like this. I like to see like a 23% correction, get us back to the 5800 level before we can move back up, right? There is some liquidity sitting way down here. I don't think we'll go as low as that to pick that up unless we have like a black swan event, right? It would be somewhere about 35% crash. That's a crash. That's not even a correction, right? If we do go here, that would be nice because we can grab this liquidity down here that is stay there. Otherwise, in the short term, I think 13% at 6,500 is very doable. And then if we do get like an expansion or if the market overreacts with the correction, we can see 24%, which is this next area. Okay, as explained. Now let's go to the daily, see what's going on in the daily because this is the weekly. So each one of these candles is an entire week, right? So the past 3, 6, 7, 8 weeks have been green for 8 months straight on the S&P 500. That's just not normal, right? I mean, yes, I get it. Over expansion, we got AI evolution, we got energy revolution, we got globalization fracture, you got fiat issues. I get all that part, but this just is just unprecedented. Historically, just don't make sense. And all the things that we look at to check the economy to make sure the economy is doing well, they don't seem to matter right now, and that's why a lot of people are concerned and even thinking like, what happens next? Everybody expecting a little shortage here and there. Blue, Michael, what's his name? Michael Burry from The Big Short. He's super short. There's a lot of things going on here, right? So we just got to pay attention and thread carefully. I do have some liquidity sitting on the sidelines waiting. I could miss this up only, but I'm okay with it because I know that things don't go up only, and then liquidity is king. So I'll hold some of my liquidity until I find it decent amounts to dollar cost averaging, and you already know how we like it. We like the double digit red days. That's when we buy. When everybody's selling, panicking, should I sell? Should I get out of my position? Oh my God, the world's gonna end. That day is when you deploy cash, right? So ideally, um, it's not about timing the market. It's more about time in the market. And so I'm in the market, but I do want to hold any type of cash that I have right now so that opportunities arise, I can capitalize and make a little bit more on buying as well instead of just buying and waiting for it to go up, right? So that's a strategy on the trap. If you guys know, you know. Let's just go to the daily, see what's going on in the daily, right? Let's go here. So this is the daily right here, as you guys can see. Very similar story, right? Straight down, minor correction, up again. It's kind of like downwards a little bit, and then we get that back up. Right, so we did have 3 days that were red within the 8 weeks that we had, right? We had 4 days red within this whole 8 weeks. It's just an amazing number, right? So the market is hot. There's a lot of things going on. What am I expecting to see next? Well, nobody really knows, right? We're in all-time high territory. This is price exploration area. It can go as high as it wants or low, or it could correct. It just, we don't know what happens next because we don't have historical data from anything above this. So we never been here before. So your guess is as good as my guess, right? But keep in mind that if we look, let's just go back to the weekly real quick. Keep in mind that if we count it from this last impulse here, right, we'll go from here all the way to there. That is about 45%. Okay, that's about 45% from that last dip. So even if we mark this bottom right here where this next run started, that means we are at currently sitting at about 18%. So we still need another 20% to go technically if we have the same run up from the last correction. So it would be somewhere around let me see, we're gonna do this again. Hold up, let me do this. All right, boom. So it's technically 45%, right? So boom, go down here, and then we go up to yeah, right around there. So 9,000, that's insane. Well, I don't think we're getting there, but 8,000 is very doable. We'll see if we can reach 9,000. We will eventually get there. I'm just not saying that right now in the next 6 months, but we'll see. That's a possibility that we can keep running. So we'll see what happens. I don't think that's the case, but we'll see what happens, man. You never know. Oh, gold's still losing, okay? Gold's still breaking down. As you guys can see here, right? We had that run up, sideways run up, all the way up, grind up, and then created an all-time high, and we have been dropping ever since. 1, 2, 3, 4, 5, 6, 7, 8, 9. So 9 to 10 weeks red out of, you know, 9 out of 12 weeks red here. It's not a good looking for gold, right? We came really low here. This is similar to the correction we had on the S&P 500, and then it pumped back up above this blue line. That blue line is very important because it's a monthly formation. Didn't get above it enough to stay there, so it broke down. It has broken down the past 5 weeks, and now we just broke another level, right, which is this white area here around 45.62. So that means we're gonna come retest this next area, 44.41. Could happen this week, could happen next. We don't know how fast it's gonna go down, but we're still in a bearish scenario for gold for sure until we get back above 5,170-ish. I don't see anything with gold, so hopefully we get a bounce here, same place where this candle almost closed. If we bounce there, we're gonna come and retest this blue line. We gotta watch the blue line here, and this one to the downside. We gotta watch this white line out of 44.35 all the way down to this where the first move broke out from 41.66. All right, let's check Bitcoin. Bitcoin doing Bitcoin things. All right, so Bitcoin's been chop city for a long time now. Go up a little bit, down a little bit, up a little bit, down a little bit. And it's all thanks to futures, right? People betting every day. That's really what drives the price. It's not spot buys. So I just got to deal with this for now. But as you guys can see here, right, created a new all-time high. We have been down only for weeks, and then we had about 1, 2, 3, 4, 5, 6, 7, 8 weeks green out of the past 3, 6, 9, 12, 15, about like 15, 18 weeks. And this little 3, 4 candles green made everybody think we're back. No, we're not back. We're still in a bear season. We just happen to have a rally within a bear, right? But it's downwards pump, doesn't break above the next level, which is this area right here, 83.5, which is I told you guys we need to get back above 83.5 to even think about any type of possible return, right? So we're not there yet. We definitely got shut down there a couple times and then just right back down. So I'm thinking we're actually in a short right now. That short has gone up, down, percentage up, 60% up, 20% down, 60% up again, down 7%. So it's been moving, but my liquidation is well above the number that I feel comfortable with. which is right above 81,000, which is this yellow line right here. Actually, sorry, it's right around on top of this area right here, which touch with these two green candles. So my liquidation is somewhere up there. Okay, but I'm looking to take profits somewhere in this area here. So as soon as you crack this 7,000, 71,000, I want to take profits somewhere around 70 to 71,000, because I know 70 is a very psychological area, as we always speak. So it's going to be hard to break under it, but if we do break under, then we'll see lower. Okay, so keep that in mind as we move forward with Bitcoin. So let's look at the daily to have an idea. You know, if you're day trading this is what you need to be looking at. What are the ranges for this week? This is the ranges that I'm seeing here for this week. So from 81,000 is the top of that range, and then the bottom of that range is 65,860. Okay, that's, I'm not saying this is what's gonna swing in the daily. I'm saying that's on top, on the bottom, the levels that you need to watch if you're trading this to the upside or the downside, right? So those are very strong levels. So if you're trading upwards, make sure you're taking off some of the table when you're getting close to them. And if you're going downside, when you get close to those, you also want to take some out, right? So keep that in mind. But the short term for this week, I see the bottom being around 73,871, and the top being somewhere here on the top of the trap box, 81.5. Okay, so we need to be above 81.5 again to make anything count towards 83.5, which is, we need to break out from there to kind of reestablish some type of momentum towards back to all-time high. All right, so that's what I had for you guys there. Let's look at Ethereum. We'll go to the weekly first, right? We gotta make sure that we get the weekly down. You know, Ethereum's got a lot of scratch going on here. Let's remove this one. Let's remove this one. I was trading Ethereum too. I shorted it. Didn't work out, but it's okay. On to the next one. All right, so Ethereum here, very clear situation like Bitcoin as well, right? We have dropped from up here all the way down to really lows, almost $1,700. Then we have picked up from back then, and then we have gone sideways for pretty much the past, I don't know, 2-3 months somewhat, right? We have a little bit of a pump to the top of the range, then back down to the range, up and down the range. That's why range trading is pretty decent when you got grind sideways action like this, because you can just buy the bottom, sell the top, buy the bottom, sell the top. It just literally happens. Look, top, bottom, 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 top, bottom, right? So you can short it to the down, then long it to the up if you like. But this is what I'm seeing. Past 3 weeks were red. This is the area right here where we cross the line, $2,000 to $2,100. If we break under 2,000 to 2,100, 2,000 under, right? Obviously psychological level as well. Break under, we're gonna go see this area fast, right? So 1,900 will come fast, and worst case scenario 1,800, 17 to 1,900 usually a very 17 to 1,900, 21 to 2,400 to 2,500. Then you got 2,800 to 3,100. Those are all areas of Ethereum where it does like sideways range, and then it just spikes up to the next level. So that's what we're seeing here. So to the downside, we need to keep very strong support at 2,075 area, right? If it breaks that, we're going to see the next levels. And then to the upside, we need to come challenge $2,400 to break to the above side. But really, for us to even think about Ethereum doing anything better, we need to be above 2,500, close there for the week, not just sometimes. You know what I'm saying? So same thing. Let's look at Solana, same thing. Like once you look at one of these, bro, like they all start to make similar patterns just because they're the biggest assets in the actual in the, you know, top 5, top 10 cryptos. So, you know, obviously they move similarly to the big dog like Bitcoin or to the entire crypto market, right? So you see the same thing, right? So big meltdown, straight down, right? And then we had this here, which was the worst case scenario at $68. Then we did a little bit of a pump, and we have been going sideways inside of this trap range for months now, right? 2.5 months to 3 months. Same thing, right? We haven't even, this one is worse than Ethereum. It hasn't even done top and bottom of the range. It's just been sitting on the bottom of the range. You could still do like a compressed trading range here, right? When it touches the bottom of the yellow, the trap box, then you go to the middle of it. It's not going to the top, but it's still touching the middle. Look, this one touched the bottom and middle, bottom and middle, bottom, top, bottom, bottom, top, top, bottom. So like this is definitely a trade, a way that you can range trade. I don't like it too much chop, too little. But if you have small portfolio, you shouldn't be choosing. You know what I'm saying? You should be taking more risk with things like this that are structured. Okay, so keep that in mind. So when you're trying to build a bag. So that's Ethereum. I'm not even gonna. I mean, that's Solana. I'm not even gonna go. Let me just go down to the daily so you can kind of see something. But look, same thing, right? The same similar ranges. We are ranging between $93 and then $81. So keep an eye on those two areas in case they break. It break to the upside. It could be a long. If it breaks to the downside, it could be a short. Now, let's take a look at one more thing here that is very important. Okay, and that is the VIX. Okay, so this is the volatility for the S&P 500. Okay, this was tariffs right here. And the volatility has been ranging as well. We have a little bit of a spike here on March 9, but past few months with volatility have been fairly low. Right, so traders don't like that because they like volatility. But this is the gem right here that I wanted to talk about, right? This is the US dollar against other currencies. And what I want you guys to understand here is that if this asset goes up, everything that is risk must go down. Okay, so do you see how this right here is sideways? That means that allows things that are risk assets like stocks, crypto, and things like that to kind of like same thing, right? Kind of chop sideways. But whenever we get spikes like this one right here, right? Look, you see the spike right here. It took us to $109. Whenever I bet you right now, if I go and I check January 13th, 2025, or any risk assets, you're gonna see a dip on it. All right. So this was the top of the DXY. That means that we should have the bottom of Bitcoin here, right? And then as the XY goes down like this, then Bitcoin goes up. And I bet you if I look at Bitcoin or stock market, June 30th, 2025, it was probably at this highest, right? And just to double check this, let's go look at it, right? So June 30th, 2025. So let's see, June 30th, 2025, 30th, June 30th, 2025, right there. You see this set of candles right here, okay? June 30, 2025, that's 1, 2, 3, 4, 5, 6, 7 candles, okay? And it even gave us our all-time high, like I said. Okay, so this is a direct correlation with the US dollar. So it started from here, right? When the dollar was going down, and then it gave us an all-time high. Now that the dollar is going back up, it gave us this right here. So that's very important for you guys to see, right? Understand correlations. So this is definitely one of those correlations that you want to keep an eye on, just because whenever the dollar goes up, right, risk assets go down, and the opposite happens as well. Whenever the risk assets go down, then dollar goes up, right? So where we at right now? Where we're down here, okay? But there are some rumors that this can go higher, that this is gonna go back to here to about 120, so way higher than we ever been before. And if that happens, you expect blood in the streets for Bitcoin and anything else that is volatile, right? Just because, like I said, when the dollar becomes more expensive, it becomes more expensive for people to borrow. So that means that companies that are on growth mode, they need liquidity to grow, and so they need to borrow. So it becomes more expensive to borrow, so they do less borrowing. So that means they grow less, right? So that's pretty much how it works. And I think that's all I had for you guys today. I'm gonna keep it short. It's not much going on this week for us to really change much going on. And then obviously the Forex calendar that I usually talk about, we only have the core PCE on price index. That's going to be Thursday pre-market, right? And this right here can affect us a lot. And lastly, let me show you something else here that is being in the news for a while, right? 10-year bond, 30-year bond. All right, so yes, 10. Let's look at US 10 and US 30, okay? So look at this. There's nobody can control this. Trump can control this, nobody else. Whenever these things spike, it's a problem, okay? That they need to fix something, okay? And look, it's spiked here up to 5%. Whenever you look at these, if you go look at the market, again, correlation, the market probably tanked that day, right? So same thing last week, the market took a little bit of a dump because this here hit again close to 5%, and the market doesn't like that. The 10-year bond and the 30-year bond, okay? US 30-year, right? Those are two things that you also want to look at prior to investing or prior to making any type of moves in the market, because this literally tells you how the market is doing. And right now, this is not a good look, right? So the 30-year bond is above 5%. If you look at here, I don't have time right now, but if you look at here and you chart this down and you check whenever these things hit 5%, there was a lot of things broke in the system before. It hit 5 again here, and we got a little bit of correction, but nothing broke, right? But like I said, for the seasoned investors, Wall Street and hedge funds, they look at this religiously because they know nobody controls this and the market reacts to it, right? So what I'm trying to say here is that the US 30 and the 10, and there's a lot of other signs that are flashing red that we're having a blow off the top in the stock market. So that means that corrections can come. We'll see what happens. I'm not sure when they will happen, but we're due for a correction anytime soon, maybe even a crash, right? So the next 6 months, be very aware. Make sure that you protect the capital. Make sure that you have liquidity available so that you take advantage of these double-digit red days. Until then, protect the bag. You already know.